We had this conversation the other day, and you were saying, oh, we've got I forget what you said. You said something like, oh, in our newsletter or in our email to investors, we got to let them know the good news. And I'm like, what's the good news? Oh, well, the Fed cut rates. And well, I agree with you. Yeah, it's good that the Fed cut rates, but it's also, you have to ask the question, why is the Fed cutting rates? And the reason why the Fed cut rates again here in November is because of the continuation of the economic data weakening. So the October jobs report was very weak. The US economy added 12,000 jobs, and that's being generous. Now, there were some headwinds. We had two hurricanes, we had the Boeing strike. So that skewed the numbers down a little bit, but those numbers are always skewed up every single month because they end up being downward. They end up being revised downward every time. So already it's an aggressive number that ends up being revised. And even that revised number is still skewed higher because the reality of our employment market is it's propped up by the government. Government is spending money to create jobs, and those aren't real jobs. Those aren't private sector jobs. So obviously the government has legitimate jobs, and that legitimately does boost our GDP, but it's financed by debt. So that's not as good as true organic growth. So the reality is, if we just focus on private sector hiring, it's not there. It just doesn't exist, and we're actually losing private sector jobs every single month. So with that being said, I think basically, you know how they basically take about 6 months or a year to look backwards and say, okay, we're in a recession, and they announce a recession, kind of looking backwards. I think September of 2024 will be looked back on and announced as the start of a recession. So I think that's where we are. We're in the early stages of it. We're going to continue to see weakening data, and that's going to keep the door open for the Fed to keep cutting rates.